When foreign investors first set up a company in Vietnam, many focus heavily on reducing startup costs. This is understandable. New businesses want to manage expenses carefully, and accounting services in Vietnam can vary significantly in price. As a result, some foreign investors choose the cheapest option available. A freelancer, a small low-cost accounting provider, or an accounting service recommended casually online. At first, this may seem like a practical decision. But in reality, cheap accounting services in Vietnam can create hidden risks that become extremely expensive later. Many foreign investors assume accounting is mainly about recording transactions and filing tax reports. But for FDI companies in Vietnam, accounting is closely connected to legal compliance. It affects tax exposure, audit readiness, profit repatriation, corporate governance, and even the company's ability to continue operating smoothly. This means accounting errors are not just administrative issues, they can become legal and operational problems. One of the biggest risks with cheap accounting services in Vietnam is the lack of proper compliance systems. Some low-cost providers rely on a single freelancer managing dozens of clients at the same time. Others operate without internal review procedures or quality control. In many cases, reports are submitted mechanically without identifying risks or inconsistencies. The foreign investor may believe everything is under control until a tax inspection or annual audit reveals serious issues. This creates another challenge. Most foreign investors cannot independently verify whether accounting work is being done correctly. They may not understand Vietnamese accounting standards, they may not read Vietnamese tax notices, and they often rely entirely on the accounting provider's updates. As a result, problems can remain hidden for months or even years. By the time the investor becomes aware, the company may already face penalties, tax exposure, or audit complications. There are many practical situations where low-quality accounting creates significant business risk in Vietnam. A company may fail to maintain proper supporting documents for deductible expenses. VAT declarations may contain inconsistencies, payroll records may not align with labor registrations, or accounting records may not be prepared properly for annual audit review. These issues often remain invisible during normal operations, but they become highly problematic during tax inspections or statutory audits. For many FDI companies in Vietnam, annual audit season is the moment hidden accounting weaknesses are exposed. Auditors may request documents that were never properly prepared. Financial records may contain inconsistencies, supporting evidence may be incomplete, and communication between the accountant and auditor may become difficult. At this stage, fixing problems is often far more expensive than preventing them earlier. Many foreign investors do not realize that accounting compliance directly affects their ability to transfer profits abroad. To repatriate profits legally from Vietnam, companies typically need compliant financial statements, completed tax obligations, and audit-ready records. If accounting records are weak or inconsistent, the process may be delayed or questioned. This creates frustration for investors who assumed their company was operating normally. For foreign-owned businesses, accounting support requires more than technical bookkeeping skills. The provider must be able to communicate clearly in English, explain compliance risks transparently, and understand the operational realities of FDI companies in Vietnam. A provider without FDI experience may not understand foreign investor expectations, reporting standards, or cross-border compliance concerns. This communication gap itself becomes a business risk. Choosing an accounting firm in Vietnam should never be based on price alone. Foreign investors should evaluate whether the provider has experience supporting FDI companies, whether they have internal review systems, whether they cooperate effectively with auditors, and whether they are transparent when problems arise. Professional ethics and accountability matter just as much as technical capability. Because accounting providers are handling one of the most sensitive areas of your business. At LTS Law, we understand that accounting compliance is closely connected to legal risk management. While we do not directly provide accounting services, we support foreign investors by helping them identify reliable accounting and audit providers in Vietnam. We work with shortlisted partners who have experience serving FDI companies, strong communication capability, transparent processes, and practical understanding of compliance expectations. Our goal is to help clients build a stable and legally compliant operational foundation. In Vietnam, accounting mistakes are often discovered only after the consequences become serious. What initially appeared to be a low-cost solution may later result in penalties, operational disruption, audit complications, or reputational damage. This is why experienced foreign investors focus not only on cost, but on reliability, accountability, and long-term compliance stability. Vietnam offers significant opportunities for foreign investors, but maintaining compliance requires the right support system. Before choosing an accounting provider in Vietnam, it is important to understand the risks behind low-cost services. Visit lts.com.vn and book a consultation with LTS Law to learn how we help foreign investors build compliant and sustainable businesses in Vietnam.